Hi, this is James Eng with Old Capital, and I'm here with Jon Krebbs of the Multifamily Group. John, thanks for jumping on. Maybe to kick it off, give us a little intro on yourself and your firm.
Sure. Thanks for having me. I'm Jon Krebbs. I've been on here, I think, a couple times. I'm one of the partners at the Multifamily Group based here in Dallas. And we've got, I guess, 16 brokers now, all up and down 35, really, and even over to Houston, all the way up to Oklahoma City and Tulsa, doing value add B and C class.
All right, so we've got one of those BNC deals right now down in Waco. So why don't you give us a little bit of an overview of this deal, the 901, 171 units down in Waco, Texas?
Sure. This is an older, early 70s flat roof deal, but it does have some newer roofs we'll talk about. It just had a really nice paint job put on it. It's got brick and hardy. It's in a great part of Waco, HEB, Target, walking distance, good demographics. I think 46,000 is about the 1 mile median income. And it actually used to be 172 units. The current owners made one unit into a kind of hybrid model slash office. So there's all kinds of things you could do with this property. It is master metered for electricity and gas. It's got gas, and the right now the landlord rubs back, water and gas, but not electricity.
All right. For people who don't know sort of where Waco sits, any other, I mean, obviously the university is there. We have it, as number 3 here. Any other big, local demand drivers there in Waco?
Yeah, you've got the hospital there, which is very close, probably the closest big employment center, and then the mall. And Waco is a very small community right there off the loop. You can pretty much get anywhere you need to go. And about an hour and a half from Dallas and about an hour and a half from Austin.
So as those just keep growing, it seems like this location will keep getting better. So here are some pictures of the property. So talk about what sort of the seller has done, and then what you think the new buyer can come in and do on this property.
Sure. So right off the bat, I think the top right picture there is that office slash model. I think there's a big office that's already there. The plan was to turn it into a gym, and that never happened. So now you've just got this vacant building sitting there. So I think you bring that back as the office, or go ahead and follow through and turn it into a gym. There's another pool house that you could turn into an office or a gym as well. So I think you can add a new unit on the rent roll, income generating unit rather quickly. They get a premium for downstairs units. You can see in some of these photos, we've got the little private yards on the downstairs. Now those are on the 2 bedrooms. They have the private yards, but every downstairs unit gets a $25 premium. The upgrades that they've done have only been done on 31 units. That's not quite 20%. They've got the backsplash there, the stainless steel appliances, new doors on the boxes for the cabinets, and new hardware, vinyl flooring, new fixtures throughout, lighting. And so I think those units are getting anywhere from 125 for the top to 150 more for increase above the classic units. So there's a lot of opportunity there. You've got 140 units that still could be renovated, depending on how long the new owner wants to own the property and how much they want to do.
All right. So 1973, 172 units, but then one's being used as a leasing office right now. And then you said, all right, the roofs were done sort of 2014 to 2019. They painted it last year. And anything else on the
Renovated those 31 units that I talked about.
top, the 31 units. All
That's
right.
right. Yep.
So
And
this,
took care of some of the deferred maintenance. There were some plumbing issues that they took care of. Um, some other stuff to sort of bring it up to where it needed to be.
all right. So here's the unit mix. So talk us through sort of how many have been upgraded, and then what the rent differential between the upgraded and the classic ones are.
Sure. So we've got this kind of broken out here. 102 units. There's actually 103 if you count the office slash model unit that are unrenovated, and their effective rent on the rent roll is $755. They've upgraded 21 of those and are getting an effective rent of $875. So there's that kind of $120 I was talking about. There's 24 2-bedroom 1-bath units and 24 2-bedroom 2-bath units, and they've upgraded a few of each of those. And you can see on the 2-bedroom 2-bath units down there, the premium's about $150 effective on the rent roll. Generous unit sizes, 762 square feet. And if you look at we were talking about this earlier, James, if you look at the effective rent, the average weighted effective rent being $819 in 2022 for an all bills paid property, next to HEB, McDonald's, Target, Starbucks. It seems like a bargain.
Yeah, I mean, most 1-bedrooms now in DFW are $1,100-$1,200, and then 2-bedrooms are probably $1,400-$1,500. So and that's rubbing back electric, water, trash, everything. So all right, let's get into, all right, so we're obviously at the subject property. You're getting $125-$150. What would you say is probably the best rental comp to this property in terms of comparable location and quality?
Yeah, it's probably going to be that Avia. You see the sort of the size on that one is a little bit smaller on the 1-bedroom, and yet they're getting $1.24 in rent, where and the tenants pay their own electric bill, and then we're getting $1.23 in rent, and the tenants are not having to pay their electric bill. And on the 2-bedroom, they're very comparable in size, and they're getting a little bit more, but again, our tenants aren't having to pay an electric bill, which
Right.
is
So
a
it's
big
probably
a big
100,
chunk.
125 a month. My guess is, depending on whether it's July or December.
Yeah, and,
So yeah.
and that's, you bring up a good point. In the winter time, it's it's gas that all the furnaces there are, and it does have split system central heat and air, and the furnaces are gas.
Okay. All right. So if somebody's coming in, in terms of a rehab budget, what do you think they should set aside, and what should they focus in on to really drive the NOI the most here?
Yeah, we put in, this is probably overkill here. What they actually spent for a 1-bedroom renovation was about 7,300, and then it was about 8,200. That's on a 1-bedroom, and then about 8,200 for the 2-bedrooms. So we've got 10,000 a unit. We're also showing renovating all the units. I think, again, it depends on sort of a strategy of the buyer, if they're going to renovate half the units or 3/4 of the units, or take it all the way. But as you can see, I mean, you look over here, and even if you were able to capture 75% of this total here, you put that on a 5 cap, there's a way to increase the value of this property by several million, more than $5 million.
Okay, so come in, do the bumps on the interior upgrades, bring those to sort of market what you're getting already on the rent roll, maybe doing some rub back on the electric, potentially some carports, some package locker rooms, and then do they have a cable contract now, or are you thinking maybe signing one for cable and internet?
That's a good question, James. I have to look into that.
Okay. All right. So yeah, we're seeing some people maybe sign a contract with an internet provider, and then maybe it costs you you charge the resident maybe $40-50, which is what they're going to pay anyways, and then it maybe costs you $20 or something a month to provide. So just make that net spread between the two. Um, all right. So here is sort of the T12. Total income about 1.5 million, total expenses about 750,000. And then maybe talk through sort of how you got to sort of your year one pro forma here on the sheet.
Yeah, I think, maybe this isn't quite year one, but maybe it's year two or year three, or kind of a hybrid there. Because we did increase the rubs. Now they just have really on lease turns been um, getting into the rubs for gas and water, because before it was not rubs. So that's why and on this here, this is actually a little bit of a mistake. It's actually a pretty big mistake. So the rubs, there was a sort of a smoothing or allocation of some money that was collected earlier, and that's why you see this big negative number on the T1 water. And I really wish I would have caught that, but you know, we increased the rubs, increased the other income on the income side, burned off a lot of that loss to lease, and then on the expenses, they're actually running it asset down there. The big company out of Houston that just merged with Citygate is doing a really good job. They've got, we went ahead and bumped the payroll a little bit and the marketing. But I'll tell you what, when I was down there Friday, I did 3 tours on Friday, and the manager was saying that, they're 90% occupied, but she said that's because the owners aren't really releasing capital for them to make units ready. That it's the Waco market is very tight, and rents have been going up substantially there. So, they're running it about like we would expect to see on repairs and maintenance, administrative costs, contract services. So, one big question will be that we've been getting a lot is taxes. And, we don't really know where they fall. I do know that the current owners were assessed at about 80% of purchase price from what they bought it from. So I think, your aggressive buyers are probably underwriting 70-75%, and the more conservative ones are at 85.
Okay. And then, yeah, I mean, yeah, so you might have a little bit bump in taxes here on your expense side, but then, there's still a lot of room to run on the revenue side with the interior upgrades, the rubs, and potentially some other income such as carports and cable and internet.
Right.
So here's sort of your year one, year two, year three pro forma. So let's hop over. So what's the whisper on this deal, John?
We think it's going to trade somewhere between 15 and 16 million. That's like, low 90s, high 80s per unit.
Okay. Yeah, I mean, some of the pricing that we've seen in DFW, I mean, stuff is running, 20-30% increases, in the last 6-7 months. So I think this one's still in a reasonable range. We looked at sort of Fannie and Freddie. Obviously, 10-year Treasury has run quite a bit, up to 2, and then so your all-in rate's probably closer to 4 right now on Fannie and Freddie. So if you look at this deal, you're probably going to need a bridge in that 70-75% range, probably 4% over SOFR. You'll have to buy an interest rate cap, and then you'll have a 1% prepay. So once you stabilize the asset, then be able to take it, either sell the asset or take it to Fannie or Freddie at that point. So I guess in closing, John, anything you want to share with the audience or wrapping up on this deal?
Just I'm happy to go down there. I'll be down there this Thursday for a tour. We're doing a call for offers on February 24th. So, I can get down there early next week or later this week and give you guys a tour. It's a nice, clean little property in a good location. There's certainly some things that, will turn a lot of investors off with it being master metered and flat roof. But for somebody who's looking to sort of get into their first deal at a good basis and a good location, I think this would be a good one for that.
And did you want to end with our captain, our trivia of the day, like Jon Krebbs' new nickname?
Well, so I actually got this in the mail today, and I thought it was pretty cool.
Can you put it up higher?
Yeah. Can y'all see that?
Jon Krebbs, Titan. Is this a Titan of real estate?
Titan of real estate. Yeah.
Right. So
thank you. Yeah, I got to give a shout out here. Give a shout out to Ryan Tannell over at Razin Properties for sending me this in the mail.
So if you want the title of Titan of real estate, definitely reach out to Jon Krebbs. Learn all about how to become the next Titan of real estate. John, we appreciate you jumping on and telling us about this deal, and hopefully we can set up some tours in the next couple of weeks and get some buyers out there for you.
That'd be great. Thank you, James.
Talk to you later.